So Justin, when we first connected, we had a great chat, and something I learned and was not surprised by was that you guys have recent or you've hit double digit millions in revenue, which is a pretty significant achievement. So congrats.
I think, traditionally within construction, the burden is always on contractors and builders to be the ones that go and spend dollars on technology and basically deliver, value through efficiency and productivity. We also found that that entire process was beyond archaic. It was broken times 100. Most carriers are using anywhere from 5 to 10 different systems just to get from a submission to a price.
Hmm.
And so the idea of reinventing the internal technology tech stack, the workbench that an underwriting team would use every day, also has become a huge advantage for us. And when we started, we were often responding in like 11 to 12 hours on average. Just because like even the internal systems that we were built were giving ourselves quite a bit of leverage.
Hey everyone, and welcome to the Bricks and Bytes podcast, where we dive into construction and AEC technology. Before we get started though, if you're a startup founder or operator responsible for innovation in your company, or you want a deeper, more insightful look into technology in AEC, you won't want to miss our newsletter. From deep dives into particular technologies such as AI, robotics, design, software, and so on. Hot takes from investors betting big in AEC technology, and advice on building tech companies, including the stories and takeaways of the most successful AEC technology founders. Head over to www.bricks-bytes.com and sign up today to get this exclusive material straight to your inbox. And now for the episode.
Justin, thank you so much for joining us. Your name has come up a few times, more than once for sure, about people we need to speak to on Bricks and Bytes. So I'm glad we finally managed to make this happen.
Yeah, I appreciate it, Owen. It's fun to be here. Thanks for having me.
Cool. Good to have you. Okay, so Justin, when we first connected, we had a great chat, and something I learned and was not surprised by was that you guys have recent or you've hit double digit millions in revenue, which is a pretty significant achievement. So congrats. And as far as I understand, the business model that you have pays construction companies to use tech. Is that right?
In a way, I think that what we've done is in some respects kind of shift where the funding for construction tech lives and ultimately resides. So I think traditionally within construction, the burden is always on contractors and builders to be the ones that go and spend dollars on technology and basically deliver value through efficiency and productivity. But we're an insurance business. Shepherd, fundamentally provides insurance coverage to customers. We also accrue the benefit and the value when a construction tech product makes a customer safer, have less claims, higher quality products. And so, we felt like if we could build a model that really shifts a little bit of that expense burden from contractor to financial service provider, which is us, it's a win-win for everybody. So we're not necessarily paying them dollars to go, buy SaaS, but at the same time, we can reduce our total cost in terms of premium in order to reflect and reward a customer's investment in these tools. So it's really through reduction, through crediting, through discounting that we can fund some of the technology.
Okay, fine. I don't think we actually missed an important part. We didn't mention that you're CEO of Shepherd, which is the company we're going to be speaking about. But just so I understand this, so you have a product whereby if someone is using a construction or a tool, perhaps doesn't necessarily have to be a construction tech tool, does it? It could be any kind of software tool.
In some respects, we've really indexed on construction tech, but we have partnerships with more generalist providers for even, for example, like telematics, partnerships like Samsara and Motive. These are, products that are used across industry.
Okay, fine. So if someone is using one of these tools, then you can effectively give them lower premiums as a result of them using these tools.
Yeah, and that's a lot of the core thesis of why Shepherd exists, which I know we'll talk more about. But we've studied data sets and really understood the value of some of these products from an insurance perspective, and so the ability to give back dollars in terms of premium and reward a customer for an investment into a tool that they've already been using, or prospectively would be interested in using. It starts with the data, it starts with our analysis and some of the actuarial work that we've done. But then, yes, ultimately, we can get to a point where we say, we'd love to offer you coverage. And if you're using one of these technologies, that the price is lower than what it would be without.
Cool. Does that mean that you only work with people that are using technology, or your insurance product is available for everyone?
No, there's situations or cases where a client may not be using one of the direct partners that we have. We've kind of chosen to go deeper with fewer partnerships. So we don't, construction tech, as we both know, is this massive, kind of fragmented world of different tools and technologies, and a lot of companies have chosen, different tech stacks, if you will, and so we don't have like partnership and integration with the entire ecosystem of construction tech. And so there are definitely cases where it's a more traditional motion for us, where we're interested in what the client is utilizing, but we don't necessarily have the same level of data integration. So we treat the client, and underwrite as if, sort of on a more traditional basis. So it's the good news is that some of the partnerships that we have within the construction space, companies like Procore and OpenSpace and Autodesk, they are really well adopted. And so across all of the different relationships we have, about half the time we're getting a tech partner overlap with one of our existing partners. So that sort of translates to the number of different clients that we're underwriting that, or the percentage of clients that we're underwriting that have a technology component. But there's still quite a few that don't, and that doesn't mean that they're bad risks or that they're not a great opportunity and partner for us. So it is a little bit of a mix, and ultimately, I think over time that number and that percentage of overlap with technology will only go upwards as the industry continues to adopt and as we continue to expand our ecosystem of tech partnerships.
So actually, you are doing a suit, like, I don't know if this is the right word. I won't use it. In fact, I was going to say pseudo sales for like other tech solutions, but like if people are being reward, not like there's a direct impact, right? If for using tech, then it makes it easier for these solutions that you're partner with to then sell to their customers, because they have another tool in their arsenal to say, yeah, if you use us, your insurance is going to be cheaper.
Yeah, I think we're a great channel partner, without a doubt. I think a lot of the relationships that we've built, I think, have started with, a value prop of Shepherd being able to say, hey, we're going to be the first insurance company within the construction space that actually gives you feedback on the ROI of your product from a risk management perspective. So many different insurance companies have kind of flirted with the idea of creating partnership, but where they've always kind of got stuck or sort of shot themselves in the foot is their inability to actually study the data and then return to a technology partner, a SaaS provider, and say, here's the real analysis and the impact of your tool from a claims perspective. So in order to build these partnerships, we do require our partners to work with us on a data basis, just to create credibility in the value of their product. And sometimes we come away and say, you know what, there's nothing here that we can really sink our teeth into. But most of the time we have found that there is real value in the use of different tools and technologies on the job site. And so as a result, we can create, a basis for how we think about the discounting. And then from a partnership perspective, we become a great kind of, I'd say, lead generation for a lot of great partners, but also, a great case study for them to showcase, that their product is more than just a productivity and efficiency tool, but actually a safety and quality tool that should translate to better insurance rates, which is a huge lever for so many of our businesses and clients that are competing, and every advantage counts. And if they can say, I've got a cheaper insurance rate, that often translates directly to their ability to win new business.
Okay, cool. All right, cool. We'll dive into Shepherd a little bit more later on. But before we go there, Yeah, interesting story about your background is that you had a startup previously, TradeTap, which was acquired by Building Connected before they were acquired later by Autodesk. Can you tell us like how did TradeTap come around to start with, and then we'll go into perhaps from there on.
Yeah, it was definitely a wild and fun ride. I started my career as a civil engineer, so I was out in the field managing work, and I ended up taking a finance position at a company called Hunter Roberts, very, very large general contractor in the New York City market. And finance, leads itself to risk pretty quickly. And I had an opportunity very early on in my career to run the risk management team underneath, some really senior and experienced leaders at the company. Um, and being a young kid in a enterprise risk management role, and obviously having an interest in entrepreneurship and tech, there were so many things that I was doing day to day as a risk manager that I felt like was archaic or just unsupported from a technology perspective. Um, and so, these are, basic workflows and, things that ultimately, most construction companies, even the largest ones have pretty small, risk management and finance teams that are serving obviously their broad operational business units. And so, I felt like one process in particular was quite cumbersome for me, which was how we evaluated and qualified subcontractors, which is traditionally referred to as subcontractor pre-qual. We had kind of a very basic spreadsheet oriented process, as is true for a lot of pre-construction activity, and we ultimately, like, it was a bottleneck. And I remember having executives from the project teams coming over and just hovering around my desk waiting for me to give them an answer on whether or not, like, a particular subcontractor was qualified for an award that they were looking to make that day or later that week. And so all of this kind of sparked the idea of, like, there's a better solution here. There's a SaaS platform that could serve this well. And I think what encouraged me to think about doing it independently and ultimately founding TradeTap was the idea that it wasn't just us at Hunter Roberts that had this problem. There was, dozens and dozens and ultimately, thousands of contractors across the country that needed to do the same process and qualification. And from a subcontractor perspective, they also have to go through that process every time. So we just felt like it was a natural network opportunity. And so we ended up founding the company bootstrapped, and really, got to work partnering with, initially New York City contractors, and then we grew from there. And pretty quickly, and obviously the story with Dustin and Building Connected, they were obviously a couple of years ahead of us. We founded the company in 2016. Dustin had started a little bit earlier than that, and Building Connected, also a pre-construction product serving largely the bid management space. They had some solutions around pre-qualification, but it wasn't as robust and sophisticated as the things that we were doing at TradeTap. And so naturally, I think customers were starting to pull us together and say, hey, how do we make these two products work as one? And that led itself to acquisition fairly quickly, just given kind of the synergies between our teams.
So it was actually quite a natural occurrence, right? That it was almost like it was destined to happen between you guys at some point.
Yeah, I think that when the market and when customers are pulling you in a direction, I think it's important to listen. Obviously, you can take a different track and you can decide, hey, I'm going to actually, like, build out a competitive solution to this other thing that customers want, and I'm going to try to be the winner. And I think both of us, maybe had that opportunity, but at the same time, I think we both felt like that if we combined forces, it would ultimately be the best outcome for the construction market. And, I think that having bootstrapped the business, not having a fairly, simple cap table, it allowed everything to kind of flow quickly. And ultimately, like, I think, like, looking back on it, like, absolutely the right move. And in a lot of ways, people think that we started TradeTap, like, specifically to be acquired. And,
Yeah, I guess it could look like that. Yeah.
I think honestly, a lot of that was just me being quite naive about like startup and being so ultra focused on solving a pain point that I used to have personally.
Mm.
That sort of the rest kind of took care of itself. And I know we'll talk about Shepherd, but I think with Shepherd, I think one of the lessons I took from TradeTap was I was hyper narrow focused on point solution, not often thinking about like the big vision. How does this become a venture scalable business?
Mm.
And I think having done that kind of on a first go is a really healthy way to go into a second startup and think differently about what type of scale and impact you want to reach, and kind of start with the big outcome, and then and then reverse engineer to where's the MVP, where's the beginning.
Mm-hmm, mm-hmm.
And I think I'm so glad that I had that experience, because I think it influences a lot of how we think about Shepherd today.
Yeah, starting very, very narrow, right, and then expanding outwards. How was it going from, because there was three co-founders and a small team at TradeTap. How was it going from just like you guys to then a bigger team? I'm not sure how big Building Connected was at the time, but then also to that, my guess is you also were employed by Autodesk as a result of the further acquisition.
Yeah, honestly, the Autodesk thing was Autodesk happened about 4 months after the we sold the company to Building Connected. So it almost was like this, kind of rolling experience of transitions in a good way. Building Connected was about 150 people when we were acquired, and I think by the time Autodesk acquired the business, it was almost even past 200, a little bit above 200 people. Um, it was, I think like integration is hard in general. I think culturally the integration was easy. I think like Dustin and I had a really common sort of viewpoint on the industry, what building for clients first, having lived on the client side. Both of us came from similar backgrounds. So I think that part of it, in terms of like our teams and our culture and kind of coming together and working together, was quite easy. But merging products, unifying tech stacks is always hard, no matter what anyone says, no matter how small the product or the company is, when it's purchased. And so doing that, obviously, TradeTap to Building Connected, and then Building Connected, which was a much bigger product, into the Autodesk universe. That's a challenge for sure, and it can be messy at times. It can be frustrating at times. I think for me, like I found myself learning a lot at Autodesk. I have a lot of great memories from the time at Autodesk. It was a very like fun and unique moment to be around other entrepreneurs. When I got there, PlanGrid had also been acquired, and had an opportunity to work with some of their early team. Getting to know Tracy, and I think like that concentration of people was really unique and incredibly fun. And I think like a lot of people there have now sort of moved back to wanting to build something new, which is also like I think indicative of just the value of that time together. So I wouldn't say it was easy. I think acquisition is hard. I think like multiple acquisitions getting mushed together at the same time is also like putting hard mode on hard mode. But I think that overall, like for me, a great experience.
Mm. How I'm curious how you like stay motivated during that period, because you go through like this crazy like emotional experience of being acquired, then being acquired again, and then go into like a very steady, in the grand scheme of it, steady company. I think Autodesk probably like 15,000 employees or something like that, roughly. Like how does that feel? Is it like are you like a little bit like like when you get to that point of being at Autodesk, is it difficult to really have the same drive?
It was, I guess, in some ways, it was like a unique experience for me. I felt I didn't necessarily feel that way. I think, early on, I spent about a year and a half at Autodesk. So, I was there in the beginning, like hyper motivated around the momentum of the TradeTap Building Connected connection. That was still, we were only in the first inning of that even being real. And so customers were responding incredibly well. The product was growing really, really quickly. And that was like creating a bunch of challenges, a bunch of needs. And so just the excitement was, I think, driving me around. I want to make sure that like this product sticks and lives in the Autodesk ecosystem for the long term. And I also want to, make sure we kind of realize the vision of why we sold the business to Building Connected. And so I think for me, like I felt like I was kind of still in like full drive mode, all things on. And then COVID happened towards the end. So we sold the business in the summer-ish of 2018. And then, we got to early 2020 and COVID happened. And, I think at the time, maybe it was starting to feel like, okay, we're sort of level setting to the Autodesk pacing. It's a little bit different. It's a bit big. There's, more red tape, more bureaucracy, all the kind of normal stuff that comes with a 15,000 person company. But then COVID happened. And I think the sort of, that obviously shook the world. But importantly, I think for us, we were sort of trying to think about, what do we need to do for customers? How do we respond for them? Is there specific things we can do as a partner? So that just created kind of at the end, like a different set of problems and challenges. So for me, a year and a half, short period of time. But honestly, like it was pretty pedal down, for most of it, which is, I know, surprising, but just kind of how it went.
Yeah, it seems like what I've certainly noticed is that Building Connected and PlanGrid acquisition, lots of people then went to Autodesk, and now people are out the other side of that, like yourself and various others, and they're all like onto like, I don't want to say bigger and better, but like big things from sales roles and founding their own companies and so on and so forth. So I'm curious, was there what was the culture like at Autodesk? Did you learn a lot whilst you were there? Do you think it gave you a good foundation that ultimately is what Shepherd is? Is there an experience that you go through there where they're pushing you to think, or is it just because you've garnered such a great network because you've been working with these people that in and of itself is self-perpetuating and creates like this incredible tech building environment?
Yeah, I think when we reformed in Autodesk, we created this thing called Autodesk Construction Cloud, which obviously now is kind of the construction banner of how they operate. But the reality was that Autodesk Construction Cloud was PlanGrid, Building Connected, a product called Assemble, and then some of the kind of existing BIM 360 team. But I think the culture in a lot of ways was kind of still startup dominated. The talent and the people there were mostly people that were hired, at least from where I engaged and the people that I worked with day to day, they were, PlanGrid and Building Connected people for the most part. And so you had those cultures kind of dominating in terms of in my opinion, sort of the vibe of that team, rather than sort of maybe something else that is more of an Autodesk kind of culture. And again, like I just think for me, it wasn't long enough to experience something different. So I would just say, like, I learned a lot. I learned a lot from Building Connected. I learned a lot from Dustin. I learned a lot specifically around sales and enterprise sales, inside sales teams. We had an incredible sales leader at Building Connected, and the sales talent there was really, really dense. And I think I learned a lot about go-to-market, just being there, and sort of coming from more of like a founder-led sales mentality and not really being as formal. So I learned a ton from them. I think the same thing existed on the PlanGrid side in terms of their go-to-market motion. They had such robust teams and sophistication around how they thought about targeting and converting customers. And I just thought that was an incredible learning experience. So I would say, like, I learned a ton, and my whole mind space when I was there was, hey, this isn't going to be forever. I'm not really like looking to, sort of do the political thing internally. Like, I am here completely to do training for the next thing. And in doing so, like, I'm going to push as hard as I can to get TradeTap and Building Connected to ultimately, and then Autodesk Construction Cloud to like the absolute best that it can be in terms of adoption in the industry. And I think that was like a really good trade-off for both sides. But I guess I think like to me, I was an opportunity to learn so much, and I moved to San Francisco just to be in it more.
Mm-hmm.
I'm so glad that I did that.
You still there, San Francisco?
Yeah, we're here. Most of Shepherd is here in our HQ in San Francisco, but we also have a growing New York office as well, where I was before.
Oh, very nice. Yeah. Okay. So how the hell did you then end up in insurance?
Yeah. Well, I was a risk manager, so I think like I have always kind of been in terms of background at the intersection of traditional construction, technology, and then insurance and risk management. And I had an opportunity just to get exposure to insurance via running the risk management group at Hunter Roberts and being responsible for buying and placing insurance, but also managing some of our self-insured programs. We had a fairly large, what is referred to as a captive program, meaning like self-insured risk. And there was a real insurance P&L that needed to be managed and needed to be profitable, even, at just on the company side. So I think insurance was something that I've been around for a long time, even if I never worked at an insurer. I was never an underwriter by background. But I always felt like I had one, deep connections with the brokerage community. We had worked really closely with brokerage when we were building TradeTap, and also relationships on the underwriting side in terms of folks that were interested in or giving advice to some of the things that we were building that had impact on the risk management side for construction tech. So to me it was kind of natural. We sort of, as we were thinking about things that we wanted to do and impact, I had a lot of opinions on like whether or not I wanted to do construction SaaS again, and I felt pretty strongly that I didn't. I think like it's a very saturated market right now, and it's honestly it's not an easy thing to do. And I really wanted to think differently about like a new business model. Where can we create value? Where can we involve ourselves in a transaction that's already happening and improve it and bring more value to the table and more impact? And so, I think we didn't totally understand what Shepherd would be in the beginning, but we knew we wanted to be part of the insurance buying process and we wanted to make it better. And so I think that's kind of how it started. And then obviously like everything grew from there.
Mm. How curious how you really identified the problem that like the issue here, like the fundamental thing is that you are reducing the cost of premiums for people where people have to have insurance, and if you're giving people a way to save money for something they're obliged to buy anyway, like it's a complete no-brainer in my head. So how did you get to that?
Yeah, I think you nailed it. Like, I think insurance it's not an optional purchase. Like, we're not convincing somebody that they need to buy coverage. They already know that. The core thesis of the company was generally the idea that underwriters within the construction space were not really giving credit or value to the complete picture of a customer. The way underwriting traditionally operates within construction is to look at exposure. So what are you doing and where are you doing it? In terms of operations, like are you a trade contractor and where are you operating? Where are your projects on an annual basis? And then obviously your loss history. What is your actual claims experience over a 5 to 10 year period going back in time as an indicator to sort of predict what you should price that coverage in the future. I don't think anybody on the underwriting side was really saying, okay, but also what's the technology stack that is used out in the field in order to deliver the projects? And what's the value of that? Because in the last 5 years, that has changed dramatically. There's a ton of companies that were pen and paper not that long ago that are now totally digital in the way that they operate, organize, manage, and think about workflows on their job sites, whether it's incidents and safety type of tracking or submittals, change orders, RFIs, all of the components and day-to-days of managing a construction project. Quality and safety, being so vastly important in our world. We just felt like nobody was paying attention to the data. Nobody was evaluating the impact of these tools. And so that was the core problem. That's the thesis of the business. Let's go in and enrich every opportunity, every submission that we get, let's add to it with a new data set that nobody else is paying attention to. And that is kind of the core basis. I would say that what's also cool and I think fascinating about insurance, and as we sort of sunk our teeth into just like the basics of, okay, we're going to start to do our own underwriting. How does an underwriter operate? What is the way that just this information is translated from client to broker to carrier, and what's the process for actually getting to a price, irrespective of, hey, what's the tech stack? We also found that that entire process was beyond archaic. It was broken times 100. Most carriers are using anywhere from 5 to 10 different systems just to get from a submission to a price. And so the idea of reinventing the internal technology tech stack, the workbench that an underwriting team would use every day, also has become a huge advantage for us, largely through speed. We are just faster and more responsive and easier to work with, in my opinion, than most of our competitors, simply because our team has better tools. And so, when we think about like how can technology impact insurance, like first and foremost, it's about how we underwrite, and then second is about enriching our submissions with better data and thinking differently about the value of things that others maybe aren't paying attention to.
Very good. I read about something when I was doing some, let's say, AI focused research. It said that your value. I mean, I've been called out by that before, which is why I'm caveating this, because I did some, and then I made a claim, and someone said, "Where did you get that source from?" And I was like, ChatGPT.
Yeah.
And they're like, "It's wrong."
Yeah.
I was like, "Okay, fine." So now I am caveating that, so I can happily blame AI if this is wrong. Might be right. Let's see. But apparently your underwriting process is roughly 12 hours versus competitors, which are like a number of weeks.
Yeah, I would say our initial promise when we launched the business, because even this idea, this thesis of we're going to create pricing differentiation based on technology usage, we still needed to get data. We needed to create partnerships. We needed to be able to, substantiate that. You can't just, you really can't. I mean, and we can talk about the model of being a startup insurance company, but we have partners, and those partners are part of the risk taking equation for every policy that we write. They're not going to just buy into an idea because we said it's a good idea. They want to see the data. They want to understand, how are we ultimately arriving at this idea that a customer is a better risk and is going to perform better. So we needed to kind of build up a credible data set on the Shepherd side in order to really start to create a unique program, which ultimately has become this thing that we call Shepherd Savings. So our initial promise to our partners on the customer side, so brokerages that we work with, who are our distribution channel, and then clients, was that we were going to respond on every submission within 24 hours. It turned out that we actually we were conservative in that estimate, and when we started, we were often responding in like 11 to 12 hours on average. Just because even the internal systems that we were built were giving ourselves quite a bit of leverage. We are now we're more products. We have 4 products that we operate with in market. We have a much bigger underwriting team. I would say in general, that promise remains. We're still, providing feedback and indications on most submissions within 24 hours, and that's still a big calling card of who we are. But it's not always 12 hours, but I think that's something that we've always been able to maintain. And it's been a huge value prop. It's carried us way further than I ever expected, in terms of just what does it mean to be fast and responsive, in insurance.
Very nice. How big is the team?
So the team is about 45.
Okay, nice. And your current funding stage?
So we did our last financing round was our Series A. We did that in December of 2023, so almost a year and a half ago.
Right, nice. And these are just my quick questions, just so people can understand a little bit of the context of the size of what you guys are. But typical customers that you work with?
Yeah, we work with middle market to enterprise scale clients. We are, as of today, completely construction focused. That's going to change for us as we go forward. But Our average customer does about 150 million in annual revenue, which is, in construction is construction volume. So that's a true like mid-market business, but we do serve enterprise customers, some of the biggest top, ENR top 10 customers. In fact, like we have a really strong cohort of the biggest ENR, top 50. And oftentimes we serve them, by providing some capacity in their overall program because they're buying so much insurance, but also when they're placing project-specific insurance on large projects. So just think about, all the data center work that's happening, all the power and energy facilities that are being spun up to support those data centers, the manufacturing work that's happening. Once you get to a $1 billion type of project, almost always you're dealing with top enterprise type of clients, and so we support them often on those project specific placements. But where we tend to do sort of the like annual corporate programs that are more of the like standard insurance motion outside of a project specific, that's more mid-market focused for us.
Do you find that this is a weird question perhaps, but do you find that because your product is like an obligatory requirement, does the sales process with the larger companies at the top ENR people, is it still like more enterprisey, if that makes sense? The more things you have to go through, a lot slower and so on and so forth. Or is it like more straightforward? Is it still as straightforward as the mid-market people that you work with?
So like our distribution motion is entirely through the brokerage channel, and within that there's different segments of brokerage. There's a retail broker, which is the agency that is directly representing the customer, and then there's wholesale brokers who are aggregators of other insurance carriers that retailers will work with in order to fill out a program and get access to specialty or larger markets. We only work with the retail side, and that's something that is really important for us and really strategic for us. So honestly, like when I think about customer, there is obviously the end buyer, which is our contractor partners, and there is sometimes an enterprise motion where we're in the sales process, we are meeting the client, we're talking about who Shepherd is, what services that we can surround our insurance with, but also like how does Shepherd Savings work, like what is this thing that is totally different and new than anything else. But the other side of the customer equation for us is our broker partners, and those are folks that are obviously bringing submissions to Shepherd and saying, hey, can you help me on this particular account? And so it's slightly like an enterprise sales motion. Our typical sales cycle is about 30 days. Opportunities come in, and there's a lot of back and forth between us and our broker partners to find the right solution for the customer. And often that's a multi-pronged thing. It's competition, it's pricing, it's terms and conditions, it's specifics to the client's needs. So it does feel a little bit enterprisey. And that makes sense for our business model because our average premium on a single deal basis is anywhere from $300,000 to in some cases we have $1 million plus policies. So it's allowable for us in terms of a person taking 30 days and having kind of an enterprise sales setup.
Okay, fine, makes sense. Okay, so can you just talk us through like how this works in like how people on board with you? Like how does this process start? And then to further that, what it looks like when you're working with people and they're using their systems like Procore, OpenSpace, some of the partners that you mentioned already. Like how do you actually plug into the system? And then perhaps that's a very loaded question, I apologize, but like how is the data then transmitted to you and etc.?
Yeah, I mean, we keep it pretty simple. When we're underwriting a customer, we actually present them with two different proposals, and we have a basic proposal, which is just standard insurance motion. The benefit there is we're a good quality product, good service, we're going to be fast. But in terms of like data, it's largely the same. We're underwriting using the same, and then we have this separate motion, which is the innovation side, which is Shepherd Savings. when somebody, and we present them side by side up front. So somebody can literally quantify and say, okay, I'm saving $100,000 or $200,000 or $300,000 if I opt into the savings program. In order to opt into the savings program, most customers just sign a data share agreement with us, which allows us to get data directly from the partner. So we don't ask the customer to do anything. We just basically say, hey, you're consenting to let us look in on utilization. We often talk a lot about like what type of data. And I think the best way to kind of describe it is we kind of create like a credit report, if you will, on an ongoing basis with a customer. So we're kind of scoring their utilization of a product, how frequent are they engaging in certain modules, how broadly adopted is that solution across their different projects versus a single project deployment. And so what that does for us is it gives us a picture of how robustly they've adopted, whether it's Procore, OpenSpace, Autodesk, et cetera. And then based on that score, we apply, either we apply that discounting, and we give that customer that benefit. But we have a starting point benefit that the customer will get guaranteed no matter what their scoring comes out to be, because we already have a baseline of how much better a customer is when they use these products at all. So we create an incentive, we make it simple. We say, hey, if you want the better price, we're gonna do a data share agreement together. We keep that data at a level that is not looking in on the sensitive things that a customer might object to. They sign that agreement as part of the binding process, and that creates a starting point for us to do a kickoff call, talk about the data, talk about what is best practices, and help start to coach a customer around how they can improve their utilization in order to get a better benefit when they come around for renewal. And so we try to work really closely with our technology partners to basically say, hey, we're going to help your product be more sticky by creating incentives for a customer to do more and to use it more. Because if you're a building connected, or you're a Procore, I think like the holy grail for you with any customer is an enterprise agreement where the customer is using that product on every single project, and it is the uniform standard of how they operate. We also see benefit in terms of when customers do that, they tend to outperform their peers. So we're trying to say, hey, connect with this team and let's work together, meaning the technology partners team, and like let's try to find a way to make this standard across your organization. We're going to give you a benefit immediately as your insurance provider, and then obviously the tech partner is also excited about that. Sometimes it's expanding their SaaS revenue at the same time.
Man, this is impressive. I have so many questions, but I think for time's sake, I think I will ask you one which people would probably find most insightful would be, what's the most revealing thing about companies' data and the tools that they use?
In a lot of ways, we started the company with kind of like I'd say, not conservative, but certainly kind of like, we felt like, okay, there's impact of products out in the field, but I don't know if it's 10% or 20%, but maybe it's kind of in that range in terms of how much, what type of changes and impact it has on claim frequency and claim severity. So like, how often is somebody having a claim, and then when those claims happen, how large are they in terms of dollars going out the door? When we started to study the data and actually look in and study products in the category of something like reality capture, which is where you find companies like Drone Deploy and OpenSpace and others, kind of camera technologies for documenting the project progress and also just the site conditions, we found that we would see impacts upwards of 40 to 50%. In terms of difference between users and non-users. And so I think that was just like a very revealing, surprising, and also just exciting thing for us. I think it allowed us to go deeper on some of the value, frankly, and go deeper on some of the discounts and deeper on the credits and really kind of tell the story in a much bigger way. And I think like, I think what we have found like within the data sets is that, largely like not a ton of surprises. Like we find that when customers standardize, they're better. When customers actually combine tools, they're better. So if you're using Procore and OpenSpace, you're actually better served as a business. You're more organized. You're actually going to, both, manage the organization of the project, but also document it extremely well. And all those things lead to better claims. We find that certain modules within these platforms that translate to things that are, quite obvious, safety, quality, tend to, drive performance. So, in a funny way, like it wasn't about surprises. It wasn't like, oh my God, we discovered that this random sort of variable was driving behavior, and now we're gonna like, build off that. I think it was more, the scale of how big the impact was the bigger reveal.
Hey listeners, I want to take a quick break to remind you about the Bricks and Bytes newsletter. If you're interested in learning about the technology shaping the future of construction, you won't want to miss the valuable insights we share each week. To get this exclusive content delivered straight to your inbox, head over to www.bricks-bytes.com and sign up today. Link is in the show notes. Back to the show.
That's very impressive. Okay, we got like, I don't know, 20, 30 minutes or so left to go. So I would be very interested in hearing about your go-to-market strategy with Shepherd for all the business builders that listen to this. So, yeah, accordingly, you have no specific people within your team that are titled as sales members. So how have you been able to scale Shepherd to so fast and to where it is now?
Yeah, I mean, I think in the insurance space, the brokerage, it's channel sales as a starting point. And so, I think that the brokerage model is incredibly efficient because every broker that we work with, potentially represents a one-to-many type of relationship where they're going to represent multiple customers. It's our job to deliver for them and give them a great experience, obviously to build great products, but to serve them incredibly well through the whole policy term so that they can go and say, okay, I want to bring Shepherd to every single one of my customers. So, at this point, in year 4 of the company, our best broker partners have sent us, dozens, if not, 100 plus submissions across their portfolio. And these are all kind of large accounts that they work with. So, that number one, like creates efficiency for our team. We still need to organize kind of a sales motion within Shepherd, but it is the underwriter that owns that, which is why we don't have anything that is like dedicated quote unquote sales. We'll experiment with dedicated sales. I think that is something that is in kind of our near future, and there's value of having people that are, solely focused on that. But what we liked about having underwriters own the sales motion is that it feels a little bit like founder-led sales, where they have this like deep stake in kind of the outcome. It's not just about, hey, I need to get an opportunity in the door and then move on to the next, like demo or whatever it might be. An underwriter also is like working the account from, cradle to grave and making a decision around whether or not we're going to, propose and even quote that business and then ultimately, negotiate to its conclusion and try to win it. So underwriters at Shepherd are responsible for outreach. We have territory-based assignments. So we have teams. We have an East team and a West team, and then within that, we carve up different territories. And so it looks and feels like a SaaS sales team in a lot of ways. And we have, a lot of kind of top of funnel tracking and all the normal stuff that we used to do at Building Connected and at Autodesk. We do it here, and the funnel honestly is like not very different in terms of conversion and how things go through, initial outreach through what we call bind order, which is a win, quoted one. And so, I think we've organized like enterprise SaaS sales. And that has actually been unique. I think insurance companies do this, broadly, but I don't know that they organize themselves in the way that a tech company would. And so I do think that's helped drive us, in a unique way. And the thing that we hear over and over again from our broker partners is that, for the ones that we've like really connected to well, it's you guys are top of mind. You guys are really communicative. We understand our wins and success with you. You're good at case studies. Like these are all things that typical insurance companies in our industry don't really do. And if they do them, they don't do them well. And so, we do marketing in a way that an enterprise SaaS company would do marketing, and I think like that itself is unique, and sales is a big part of that too.
Hmm. Very nice. Is it mostly inbound from at this point?
A lot of it is inbound, yeah. So there is kind of like a product driven thing there
Mm.
where, somebody has success. There's a word of mouth thing that happens. And again, this is why experience matters. Like most of the time, and I think this is like the maybe surprising thing that people that are outside of insurance, um, more than 50% of the time, we don't quote the business. So our quote ratio, meaning like the percentage of opportunities that we actually get to a proposal on, is often like 40% or less. And what that represents is kind of a mismatch between the business and our appetite. And there's a lot of things that can kind of go into that.
Mm.
Um, for the 60% of the time that we're not even quoting the business, it still really matters how we respond and how we show up. I think a thing that I hear over and over again from broker partners is that a fast no is incredibly more valuable than a long maybe. And so we've gotten really good at the fast no. And we've been able to say, hey, like we're not a market for certain types of things, and that's totally fine. But I think that actually leads to like, okay, great. Like, thanks for getting back to me right away. Like I have 3 other deals that I think are better
Yes.
for you guys anyway. And that creates an inbound motion, as much as kind of the case studies and the wins do.
Yeah, perfect. Okay, so how was it? How did you? This was an interesting question to ask. How you secured your first 10 customers, if you remember.
Um, yeah. Our first 10, um, I think like it started with, really narrow focus. One of the things that we have chosen to do here, I talked a little bit about like retail brokerage. Most insurtech businesses, the vast majority of insurtech, and then also the vast majority of businesses who operate in the business model that we do, which is MGA, managing general underwriter or agent, they operate through the wholesale channel. And so they're kind of one step removed from the risk because there's a retail broker, then a wholesale broker, then you. And so we chose to go closer to the risk. We also chose to go through, a more distinct set of retail partners. When we started, we kind of almost created exclusivity around access to Shepherd. And so there were only a handful of brokers who, even were notified about our launch, and what our first products were and what our appetite was. And so I think what that allowed us to do, is kind of like focus the ICP in a way and say, look, this is who we're here for, and this is what we want to win on. We're not interested in just seeing, anything and everybody. We really want to see things that are going to help us kind of like grow the early days of this portfolio. And so, I'd say if our first 10 wins probably came from 3 or 4 different brokers, who all sort of just like were those early adopter kind of like, early partners and the folks that, have kind of, believed in us. And some that we had relationships with coming into the business and saying, hey, like we want to partner with you even during the setup phase to get your feedback and kind of incorporate that into what we're doing. You can bring people along during that setup so that when you do launch, they already feel invested. And then ultimately like they're excited to be the first one, and the first, the first win that you have, like that means something to them.
Mm. Very interesting. How did this change as the company scaled? Like, did it actually change much? Like, what was you doing different in the early days versus like what you're doing now, for example? And was there any like sticking points where you got to a level and you're like, oh, I'm not sure how we move on from here, and eventually how you got through that?
Yeah, I think, I think we sort of got much more organized, as we grew around like being intentional about our outreach. Like I think, when you start, you're just kind of like focused on relationships in areas where you have early traction, and you're just like really trying to learn and listen to the first customers and the first partners that are giving you opportunities in business. And then I think you start to like zoom out and say, okay, we're having some success here. Like clearly our product has traction and it's maybe showing signs of early market fit. now I want to actually ask some harder questions, which are like, where are the areas of this market that we're just not seeing anything from because we don't have pre-existing relationships, or, word of mouth is not traveling from, the New York office to the Kansas City office because they operate completely differently on the distribution side. So, I think once we got more organized, candidly, that sort of like was the next phase of growth. Um, there definitely was a time very early on in our journey as a company where we weren't necessarily organized about our outbound efforts. We weren't necessarily even tracking, at least like tracking and communicating at a recurring level on what the top of our funnel looked like at all times. Um, Even though I had all the experience of building Connected and Autodesk, I think like you just naturally are focused on like, I want to make sure the business is like working and all the pieces are operating. And there's a lot of complexity to insurance. And then you sort of like zoom out and say, okay, like what's happening on the go-to-market side? What are we learning? What are we seeing? And there was a quarter in the early part of 2023 where we were pretty flat, if not a little bit down from where we were the prior quarter. And to me, it was a little bit of a red flag of like, hey, is this business going to sort of stagnate and putter along, or are we going to like figure out a motion that works and creates growth for Shepherd without necessitating some of the things that are really dangerous for an insurance company, which is when you start to say, I'm chasing growth via changing my appetite and making decisions that are counter to the things that I think are going to drive profitability of the actual insurance side over the long term. And so it was kind of at that moment we dug in and said, okay, we're going to like build a go-to-market machine here. And we're gonna think about territories. We're gonna think about outreach motion. We're gonna think about how do we reach the people that we want to reach, because the way that we grow is by expanding the opportunity flow at all times. And so we've had two things happen really sort of almost since that time. One is 7 straight quarters of growth. And 7 straight quarters of growing submission volume, meaning more business coming in. And we've done that, I think, largely just based on like organization and focus more than anything. But then all the other stuff kind of piles on, the stickiness of the product,
product market
word
fit.
of mouth. Yeah.
Mm-hmm. At what point did you realize you had product market fit then? Was it related to this?
Yeah, I would say probably like, somewhere in the middle of kind of like towards the end of year one of our first insurance products, as we were coming into our first expansion and getting from one insurance product to, so there's different coverages. We offer several now. I'd say towards kind of like getting ready to launch our first expansion products, it really felt like the machine was working for the existing solutions that we provided. And so, I think it took maybe, 3 quarters to kind of get to that, like, hey, this is, there's something here people are resonating with. I think the other inflection point that I point to often is, we kind of relaunched Shepherd Savings after we had hit critical mass on the data. And so, when I was mentioning, like, when we started the company, we didn't have a ton of data. We were able to get to the point where we felt like from an actuarial perspective, we could refresh and run some more robust analysis. And that's where we came away with these really fun outcomes of, 40%, 50% differences between users and non-users of technology. Once we got to that point, we kind of relaunched Shepherd Savings, and that was another huge momentum boost because frankly, we were also like being much more bold around the program and the value and ultimately impact to customers.
Were there any obvious telltale signs that you had got to the product market fit? Was there like people inbound suddenly shoot up with people referring you? Were you unable to fulfill like the amount of inquiries or requests and so on and so forth that you were receiving from customers without revealing too much?
Yeah, I would say we kind of hit like, we've been talking about this a lot internally. I think that we probably hit like local maximum of what our team could handle in the first quarter of this year, which was a really like, it can feel like everyone's feeling like, wow, we're like kind of close to breaking. Like everyone is in full like gas pedal down mode, but like we could see cracks maybe starting to develop if we don't meet them with either a combination of hiring or advancing some of the tools and technology for our team. So
Mm.
honestly, like I really like that from a philosophical perspective. Like I like getting to the point where we sort of understand like maximum capability. What is the most that an underwriter could do at Shepherd today? So that then we can reinvest and sort of dip down our efficiency. So that's like maximum efficiency is when you reach that breaking point, and then you understand what's the ceiling. Then we're going to dip down into that. And so we've scaled up our underwriting team a ton, even in the last like I'd say 2 months. Our underwriting team is now closing in on 20 people. Um, the so the efficiency is going to go way down, but I think like we'll sort of have to test ourselves again. Like we'll have to sort of push it back up. And if it doesn't sort of raise to a new local maximum, it means like we can't come up for air and like something is not working as expected. So we're in that cycle right now, like investment, we're going to hire a lot. We've got a lot of great talent who are learning about our story and want to come work here. And we're going to go, and we have the capital to be bold and go add them. But we're going to need to prove that that has now, increased our ceiling in terms of what we can handle.
Yeah, can it be like a bit of a scary experience? Because like I guess you look at a little bit, I don't know the right word, it's comfortable here, but like you hit a peak and things are going great, and now you're having to like jump off the cliff a little bit again to try and like take it to the next level. I suppose, how do you calibrate your mind around that without having too many sleepless nights?
um, I think for me, like I have I mean, I believe like the CEO founders of any business need to set the pace for the company, and I think the pace um, is often going to be like it's going to feel aggressive for most of the team, and so for me, like I know that like so for me like right now we are beginning to put our first wheels in motion around industry expansion. We think that the playbook that we've run within construction, all the problems that we solve for, they are not unique to construction at all. Like we think that construction is probably the most complex commercial industry. But when you start to think about things like real estate or manufacturing or energy just any other sort of high hazard business that has a significant attention to risk management, a lot of the same problems exist. A lot of the same underwriting inefficiencies exist. A lot of the same like advancements in technology and then lagging underwriting, focus on the value of those tools also exists. So for me, like, I think the way to sort of create urgency and to, make sure that we are kind of like setting the right pace so that we don't reach a point where the whole company starts to kind of like plateau off is to always be thinking about, okay, like what do we need to look like another year from now, another 2 years from now, another 5 years from now, and what are the things that we need to be doing today to get there? And I wouldn't be able to do that if we didn't have awesome, leaders and executives on our team who can kind of continue to make sure that we are focused and we're doing the right things in the business verticals that we operate in now. So yeah, that's kind of how I'd say like I never feel like complacent. Maybe that's like me, and I'm just like a little bit broken in the head. But I'm always sort of thinking like, how do we get to this like much larger impact, and how do we build something sustainable long term?
Mm-hmm. Okay. Maybe two last topics or questions. You mentioned partner channels, I think is the term you use. Uh, Partnerships. Let's just say partnerships in my simple brain. What's your philosophy around like establishing good partnerships? Because obviously you mentioned that you have them with brokers and you also have them with uh, tech solution providers. So yeah, how do you approach these and convince convince the uh, convince the other people to partner with you?
Our philosophy, in a lot of ways, has been let's be hyper transparent about building Shepherd, and the way that we do that is in through like updates and communication. I read in a monthly update. I've written a monthly update that goes out to all of our broker partners about the progress of Shepherd since the beginning of the company. So we're for 4 years, every month
Wow.
I've written here's where we are as a business. Here's what we're thinking about next. I get very few honestly, I could count on one hand the number of people that have responded and say, please take me off of this. And I was expecting we would have a lot of like, hey, like, I don't need your update. Like, please leave me alone. But I get a lot of people who come back and say, hey, thanks for sharing this. This is really
That's
interesting. Or like,
cool.
I feel like I'm, contributing to, this journey. It's also a great opportunity for us to like shout people out and be like, hey, I want to say thank you to this person for this thing that they did. And then, inevitably we're out at like a conference, and, somebody will be like, hey, like, how do I get on the list? Like, how do I get a shout out? And so we create this like fun little competition, I think, element of it through transparency. Our head of customer experience, Laura Watts, is also really great at this. She also sends out, a little bit more like tailored updates at the partner level. So we actually create leaderboards for our partners and say, here's how you're doing relative. And we were a little bit more specific within those partners, because you can, obviously use names and clients and stuff like that. And so those, often are like conversation starters for people. So I just think sharing the journey is unique. And I think there's, big insurance companies are not sharing the journey with their broker partners. They're like trying to figure out their own thing. So I think we can stand out by doing that. The other thing that we just did, again, something Laura created that was incredibly fun and impactful, is a partner advisory board. And so we pulled together 8 individuals from different brokerage partners and brought them together. They're all competitors, but in a lot of ways, like, they're all also, folks that have helped build Shepherd to where it is now. We do a quarterly check-in, or a quarterly session with all of them, and we just did our first annual onsite where we brought them into our office, and we did a full 2-day like event, which included everything from talking about go-to-market strategy, but also like really engaging with our engineering team and all the tech side of Shepherd. And we did a hackathon with the brokers as judges, and like, they've never been part of something like that. And I think that was incredibly fun and unique. And it was also like eye-opening for them in terms of the capability of what that side of the business, my co-founder Mo, who's our CTO, like, his team can do incredible things. And we did sort of like an AI themed hackathon showing them all the impact. And, half of the partners were like, we need this internally, like, we want to use this thing. And it was just really fun to kind of share that side of it. And I think these are the ways that you create partnership that is deeper than just a deal.
Nice. I was just gonna say, you said it, but we managed to do 1 hour and 4 minutes without mentioning AI. But you broke the trend, but all for good reason, though. All for good reason. So yeah. Okay. Justin, maybe the last one would be around hiring, as we've been asking lots of people this question recently. Yeah, what's your philosophy? How do you hire the best?
Yeah, I mean, we are opinionated about a couple of things. We're 5 days a week in office. And I think, for some people, that's like an immediate filter and they're out. And we're totally fine with that. And in some respects, that can make our hiring process harder. So I think like we create some, I think like not trying to be everything to everybody is important in hiring, and being, pretty upfront about who you are, and what it's like to work here, I think is a way to kind of like set the bar. I ask every insurance person, what's your expectation for joining Shepherd? So anybody that's on the underwriting side, the actuarial side, the claim side, anything like that. And I just want to understand, like, how are they thinking about going from traditional large, 10,000 person, 20,000 person, public company to a 45 person startup where, there's not going to be a 2-month training process to get them started with all their systems and all that. Like, it's going to be hit the ground running. You got to like start showing impact and moving the needle for us. And so I just think that like our motion is to be transparent and direct about who we are and what we want, what type of people that we want. I would also just add that we've hired a lot of like entrepreneurs here. People that I think eventually one day will start their own company, in the same way that maybe, sort of that culture that we had at Autodesk, where there was a lot of people, whether it was Mike Powers or Dustin or, some of my other friends who have started companies from that day. I think like knowing that some people are going to be here for a shorter period of time, we hope it's 4 or 5 years or more, but a shorter period of time, they're going to like want to be exposed to other sides of the business than just their specific kind of mandate and the thing that they do, and saying, hey, I'll trade you that, and give you opportunity to get exposure and ask questions and learn about company building and all the things that we're doing kind of at an organizational level in exchange for like your very best. Give me your very best here, and like treat this as if it was your company, your startup. Go all in on being here and make this the number one priority for you. And I think when we get that trade off, we get like these like incredibly just impactful, smart people, and that's generally sort of been the other side of how we think about quality and hiring.
Very nice. Okay. Yeah, I don't really have it. Well, I mean, I have loads more that we could obviously go to, but I think time permits. So, yeah, Justin, any initiatives you guys like literally last question? Any initiatives you want to plug? What have you guys got going on? You mentioned you were hiring, that kind of stuff. So anything you want to mention here, go for it.
Yeah, I mean, to the extent that this reaches folks on the engineering side, software engineering in particular, like that is a vector that we are indexing really heavily on in terms of hiring. I know we didn't talk about AI, but AI is rapidly becoming central to how we think about all the workflows that drive the underwriting process and make the underwriters at Shepherd as efficient as possible. We want to eliminate all of the administrative components of underwriting so that an underwriter here at Shepherd is only strategic all the time. And that's like a work in progress. We have to get there. We have a whole roadmap of projects where AI is going to be at kind of the focal point of how do we make that come to life, and some really amazing stuff that we've already built that is in our platform today. So yeah, I'd say my number one focus is engineering, hiring software engineers here in San Francisco. But we also continue to hire like the very, very best on the underwriting side as well. So, underwriters who come to us, they say, hey, like we've seen Shepherd. We love the idea. Like I want to work faster. I want to work, in an environment where my voice is heard. I want to be able to, learn new product lines. Underwriters at Shepherd do all product lines, which is also unique. We use tech to drive that. So we don't sort of silo and put people into like, you can only do excess casualty, you can only do general liability, you can only do builder's risk. Here, you can do all of it. We want people to be account focused. So I would just plug hiring. Hiring is our big initiative right now. We have so much on our plates, and we need to grow this team in order to meet the moment. So I'll stop there. That's really my big
Cool.
plug.
All right, Justin, thank you.
Thank you, Owen. This is fun.
Yeah.